Good morning.
Good morning, sir, and welcome to Thursday, March 12th at the trading room for tradingology.com.
I thought you were going to say welcome to hell.
Welcome to Halt Part 2.
Yeah, really.
They found some buyers. We'll see how long they hold it up for.
Yeah, we'll see. I mean, everything's down. It's unbelievable. It's just a bloodbath. Even crypto is down. So I guess everybody had to cover their margin calls somehow.
Something, right? I didn't look this morning. I saw last night that XRP dropped down to like, what did I see? 18, 16 cents?
Yeah, it's right around 16 now. It dropped as low as 15.
Wow. I wish I had some loaded up again.
Yeah, I bought a little this morning around 15 and a half, but very little.
Interesting. We'll keep an eye on it. Andre, Stephen, good morning.
Morning, guys.
Grab the chat window here, make sure I'm not missing that. There we go.
Morning, Stephen. Good morning, Andre. Well, this is a very interesting day. Now, I had a, let's see, it doesn't, I don't think I can put a image in the chat, right?
No, you could put a link to an image, but you can't paste the image itself.
Okay.
We could swap screens if you wanted to.
Yeah, we could do that.
Or if you want to share it in the Slack channel, I can bring it up too.
Oh yeah, let me do that in the Slack channel. That's a good idea. Drop this in to the main window.
Or was it the other one that you had there with your, oh, there we go. Okay.
Yeah, there you go. So I've been talking a lot about, following the 1932 playbook. And that was a chart that was published in the Elliott Wave Theorist last night. So I think we're right, getting real close to that A level, which is about that A wave, pretty close to there anyway. We may not be quite there. We might be like maybe 1 or 2 bars above that at this point. But that was a pretty, I mean, we're down 10,000 points approximately from the high.
Almost a third of the Dow, yep.
So what is that in percentage terms? About 30%?
Yeah, we're like 30% right now.
Is it 30%? Yeah, it'd be 30%. Yeah, almost, actually more than that. It'd be like 33%, because at 30,000, which was, I mean, we were really close to 30,000.
Yeah, if we hit 20 on the nose, it'll be 33%, right?
Yep. So we're real close to that. And so that 350 to 200 level on the 1929-32 chart is what percentage there? 150 and 350.
Oh, that's, when you figure that's, the top was about here. So that's maybe 375-ish, but if we count this, yeah, like this drop here.
Yep.
So that's 150 points, right? So that's more than,
a little bit more than 150 points.
Yep.
Because it was just above that a little bit.
That's about 40%.
Yeah, that's a 40% drop.
Yep.
So maybe we got another, so I'm thinking we hit 20,000 or just below 20,000.
Maybe we're here, we got one more move down.
Yeah. Yeah, I think we're there. I think we're at that second bar, second bar there, right there. Yep.
Yep.
I think we got one more drop, and then we'll get a rebound rally. And at that point, everybody's going to think that it's safe. Hey, we're going to recover like we did in 1987.
Right.
And then it's just going to go into a very long decline for a couple of years.
And it's major mayhem.
Yeah. Yeah. So, I mean, that's the playbook that I'm kind of going by at this point. I just don't think that there's going to be I just don't think that I think if a bounce does come, maybe after today we'll be down a couple thousand points. Tomorrow we'll be down a couple thousand points. And then at that point, once we break down below 20,000, the government's got to come out and do something. I think they're gonna, they got to do something a little bit more bold than what they've come out with.
Sure, right.
What do you think?
Oh, I absolutely agree. Like, I think I saw some you were talking about, this payroll thing that they came up with. It's like, that's not going to cut the mustard.
No. Having people with an extra 15, 20 bucks in the paycheck isn't going to do it.
I mean, I appreciate it for paying myself in my own business, so I get to double dip on that, but that's not going to do it.
Yeah. And what was the other thing they were going to do? SBA loans.
Oh, I didn't hear that part. Oh, yeah, I did see a
low interest SBA loans.
Yeah, it's all about businesses. It's the bailout so far. It's nothing about average Joe.
Yep. And then the final part was they were going to delay, if you owe taxes in April, we delay it for 3 months for certain businesses, I guess.
How about we just say nobody pays taxes this year?
Yeah.
We just stick
a tax holiday.
We'll just skip. 2019 didn't happen. We'll go to 2020 next year.
Yeah. I think that's good.
Although I'm not happy that are getting refunds.
Yeah.
I can't.
Stephen asks, so with all the volatility trying to capitalize on a rally worries me. Well, I went into SRS as a hedge. That's the only thing I'm making money on right now. Trading is hazardous, as we mentioned, because of the limits, the circuit breakers. So I would not be trading in this market at all.
The only thing I'm doing is I'm buying cheap options out of the money as like a lottery ticket kind of thing. And when they move like it does, I close them out for profit, which is what I did this morning on some puts.
There you go.
I'm not trading. I'm trading out of the money and I'm buying them. I'm not selling anything. So I buy things and I sell them when the price goes up.
Yep. That's a good strategy. I like that strategy. Yeah, I bought a ton of SRS. I keep adding to it, and it's doing really, really well this morning. I was a little afraid of the liquidity in the options, but you were able to get out without a problem?
Yeah, I was in the SPY, so the most liquid thing out there.
Yeah, stay liquid. Definitely stay in the liquid ones. Absolutely.
Yeah, I closed out I got some nice returns on them. 2, 3, 600% returns on these lottos that I bought 2 days ago.
Nice.
So staying small, and I was buying puts, Andre. I bought some puts, 230s. Believe that.
Wow.
It's easier to believe now because we're closer to it. But 2 days ago, I bought 230 puts for like a quarter.
Right.
And I sold them for over $1 today.
Nice. Yeah, I mean, SRS is up almost 3.5. It is up $3.50 at this point. And I started buying SRS and it was at 17, no, lower than that.
On the SPY, Andre, not SPX.
Yeah, I started buying right around $17. So I'm up really nicely on those.
Nice.
Yeah. Yeah, SPY is the most liquid options out there.
I don't know if you can trade options on the SPX, or can you? I don't trade off the index itself.
Yeah, I have never traded off the SPX.
Is that even possible?
To tell you the truth, I have no idea. I want the most liquid. If there are options on the SPX, they're not very liquid. That's for sure.
Everybody trades the SPY. I mean, you look at the volume, and there's hundreds of millions all the time.
Yeah. Is the SPX liquid, Andre? Have you traded them?
So I can pull it up and look.
See now, when I pull up the SPX on Thinkorswim, there's no data for them. So I'm not sure. Oh, here we go. Yes, there is data. It's just delayed. That's all. Let's see how liquid they are. I would go with the SPY. I mean, I don't know, but if you're doing it successfully, that's great. Let's see what the March is. I'm actually surprised Thinkorswim is even like responding to anything.
Not locked up.
Yeah, usually they're like horrible. Yeah, I'm not sure. I'm not sure why you would want to trade those.
I'm trying to pull them up here as well.
I got the March up. It's only 13 days to expiration, and there's like no open interest and no volume at the money. I mean, maybe they're like a little bit of open interest, but nothing like the SPY. Volume is non-existent. Like 2-3 contracts.
Oh, really? Wow. So you said it was going fast for you. Maybe it's, I have my paper account open and toss, and it's just crawling.
Yeah, mine is too. I did have one YM contract that I put on last week, and it's up 13 grand, 14 now.
Nice.
This is the only. These are the only things I have. I got SRS. I'm still holding on to MGI. It's killing me.
Well, you can't sell it now, or you'd be like a retail trader where you sell at the bottom.
Yeah, right, exactly. It's absolutely killing me, but I am made up for it.
Right. It's a long-term holding.
Yeah. And of course, I still have XRP, which I picked up a little bit of this morning.
Right. So, Steven, have you traded anything in this? Or are you on the sidelines right now? I know you were doing well last week and stuff. Sidelines? Okay. The opening market halts are definitely interesting. I can't believe we've seen 2 in a week.
Yeah. Yeah, it's pretty severe. I have been so skeptical of declines based on events, like news events.
Right.
They're really trying to pin this on,
CV.
all the events.
Right.
Yeah. And it just doesn't make sense to me. I mean, yeah, I understand, but I wonder if there was the same thing happening back in like 2008, 2009. I mean, there wasn't. I mean, that was because of a financial crisis. So the fundamentals, I don't think, have changed all that much. There's something more going on here.
I think it's the addition of social media and the hype from the news is the only thing I can think initially.
It could be maybe, yeah.
Didn't have Twitter and Facebook and everybody sharing instantly in 08, 09.
Right. Yeah, it could be. It could be a lot more fear mongering and all of that. I saw a pretty good tweet this morning from Jesse Lund. Do you follow Jesse?
I don't believe I do.
He was with IBM for a while, and he went to his doctor this morning, and he posted a kind of his doctor posted this in the waiting lobby. And I'll see if I can grab a snap.
That does sound familiar. I might have seen it, or I saw something similar to it.
I'll post this into the chat. Everybody's going to wonder, what the heck is that?
You could just send it to me if you want. If you don't want to put it in the main one.
Yeah, I'll put it in the main. Yeah, I'll send it to you. That's a good idea. Everybody's going to get notified. Where did you go? You're not there.
You don't see me? I'm right here. Scroll up top. Maybe you already started typing.
Oh, yeah, it's in under drafts.
There you go. Well, looking like that person's pivot points up. Interesting. Here we go.
Yeah, we may see that bounce. I'm kind of hoping we get that 40% bounce so I can add to my SRS position.
I did see this one. This was interesting.
Yeah. Every election year has a disease. It's true. Look at that. Almost every single one. It's crazy. I remember Zika in 2016 when Trump was elected.
Yeah, and which one turned into H1N1? When was that one? Because we had that one too.
Oh, yeah. I don't remember.
And the part that I'll still never understand is why people are hoarding toilet paper.
Yeah.
Don't get it.
Yeah. So interestingly enough, though, the big hype was the fact that this is more contagious than some of the other one. But is that,
I haven't heard that. Is that true? Interesting.
well, they said because it is, the incubation period is a little bit longer. You don't know if you have it.
Okay.
That's the only reason, I guess. So you're kind of carrying it around and you may not even know, and then you infect other people. But if you knew right away that you were infected and you started to show symptoms, you'd kind of quarantine yourself, right?
Sure.
So Steven says, question about a scenario. If you had, say, a short YM and to protect it from it starts to go against you, didn't you say a previous video that you could hedge it with DAA? Yes. Same with NQ and QQQ. Yeah. So with DAA, with a DIA position, you'd need 500 deltas per YM contract. At least that was the ratio when I did that video, which was many, many years ago. I'm not going to hedge it at this point. I'm just going to say, okay, well, if we start to get a little bit of an upturn, I have my profit targets. I'm just going to get out. I would not hedge it at this point.
Well, there's the rally you were looking for on XRP coming.
Yeah. There we go. Okay. One of the reasons why I would not hedge it, because I'd have to buy call options to hedge that short YM. And when I do that, I'm really paying a high premium on those call options on the diamonds, right? Because of the volatility. So I would not do that. If I was going to do it, I would have bought them when I initiated the position. But I didn't do that either because it went in my favor almost immediately. So buying call options as a hedge now to protect your profits is not a good idea, because if volatility does get sucked out of this market, those call options you're paying a high premium for are also going to decline in value. The premiums are going to be sucked out of those. And even though the market will go up, it will not protect you. Is that, maybe I'm thinking of gamma scalping? No. There's no protection in gamma scalping. Okay, good.
There's so much IV right now that it's holding everything up.
Yeah. Yeah, absolutely.
Yeah, as soon as we get a little rally and that drops away, yeah, you would lose all that. Definitely.
Yeah, so I'm kind of hoping this really shakes out all of the weak XRP holders so that they can get out of the freaking way so XRP can actually go up.
There you go.
Here's my scenario, though. I did some research yesterday, and commodities have been in a 12-year bear market. They started a bear market in 2008. I'm talking not oil. I'm not talking specifically about oil or gold or silver. I'm talking about the commodities like wheat, sugar, soybeans, stuff like that.
Sure.
Every time, and now cryptocurrency has only been around since 2008 as well. And this is something I'm going to talk about in the Investment Perspective show tomorrow with Brad Kimes. Shout out to Brad. So if you guys want to tune in, but basically the idea is that we have been in a bear market for commodities since 2008. We've had a number of rallies over the years. Even during a bear market, you're going to get rallies, right? And it seems like every time we rally, that's when crypto went up. And then both commodities went down and crypto went down over the last 3 years, especially over the last 3 years. The last big bull market, the bear market rally that we had in commodities like wheat, etc., was in 2017. which is which was the big run up in crypto.
Yep.
And so now I think in Elliott Wave does a pretty good job. I mean, they've been calling for a bear market in stocks for now, a couple of years, but they were right. I mean, right. Eventually they were right. They did call almost the exact bottom in 2009, in March of 2009. That was a fifth wave done deal. They said, we're going up. And they hit it right on the nose. So I think there's something to it. I think it has to do with cycles and businesses and stuff like that. Well, their latest release of the financial forecast said that commodities are now at the end of a 12-year bear market. We're in a fifth wave down, and it's going to be over soon.
Interesting.
Yeah. Very interesting. And I went back and looked at charts. I looked at the USCI. So USCI, if you can you got a chart there, you can pull up of USCI or DBC. Either one is fine. DBC might have a longer track record. I don't think USCI has been around as long.
We'll pull up DBC, put her on the long term.
Yeah, do a weekly or something. Yeah, weekly would be good. Because you'd have to try to get back to 2008. That was the peak in the DBC and the USCI. I think USCI actually peaked around 2010. It's a little kind of a latecomer. Yeah, so you'd have to go back a little. Can you go back
further? A couple bars here. Stand by. We'll put it on.
Oh no, you have to go to. Oh yeah, the bars are. Yeah,
no, that one. This one. See, this is how fast Toss is right now.
Right.
And my videos and everything in Zoom. So this is why I talk to you guys.
Let's see. You can go back more than 10 years, maybe.
I was just moving this part.
Okay. Yeah. I guess it was 2010, so it's about 10 years. It's been in a bear market.
Oh, do I have 10 years on my week? Did I do 20 years on my monthly? That's what I did.
Oh, okay.
There's a monthly chart coming.
Yeah, that's fine. Yeah, there's the peak back there in 08. Since then, I mean, it almost looks like stocks sort of drop off right there. So commodities have moved opposite of stocks for the last 10 years. So my thesis is that now stocks are starting to move down, we've got a sell-off in commodities as well. But that's going to end because that's a fifth wave. So you got a one wave down. Second wave is that high in 2011 where you are. Third wave down is 2016. Fourth wave up right there. And now we're in the fifth wave. And I think DVC would probably come in maybe around $10 or $11. And at that point, I think we're going to see commodities in general skyrocket. Or at least go into a bull market rally. And that's I think that's the kind of the control of crypto because they're also commodities.
I was just going to say it's the same classification that they're looking for.
Yeah. And so when you look at the definition of a commodity, it has some utility, right? And it has, it's a useful thing. So wheat is useful, obviously. Sugar, soybeans, and all of those corn, all of those commodities have use, and they're also in somewhat limited supplies, right? And then you got copper, and then you got some of the zinc and some of the other commodities that are in there. But here's something interesting because of the events in China. And because of the fact that we're closing off borders and the supply chain has been disrupted, we're going to have shortages in commodities.
Sure.
So that's my thesis. So it kind of coincides with this fifth wave down since 2008 in commodities. and
Yeah.
we're going to see a pretty big move. Stephen, Bitcoin has options now. They do have options, I believe, on the CME. Was it the CME or the CBOE that created the options for them?
I think it might have been the CBOE, and then there's also a few exchanges that have Bitcoin futures as well.
CME has the Bitcoin futures, I think, and the CBOE has the options. Yeah.
That would make, there we go.
CBOE, Bitcoin. So if I'm correct, and I believe that I am in this thesis, oh no, it's the CME group that launched Bitcoin options. I thought so, yeah.
Okay.
Yeah,
I just don't think of the CME and options.
Well, because the futures are there, so I think there are options on the futures.
Oh, that makes more sense. Okay.
Yeah.
I love always having derivatives on derivatives.
Anyway, that's my thesis, guys. So, and also I think interest rates we hit a low on interest rates a couple of days ago. They've actually gone up. Since we hit that low on the 30-year at 0.99, closed at 0.99, just under 1%, we've been going higher. So I think that's going to be the catalyst, I think, for a decline. If we start to see, here's one thing that, because the Fed has been injecting liquidity so much, right? Yeah, there it is on the 9th, Monday, we hit 0.99. We've been going up since then.
Yep.
The short yield, the short end of the yield is lower, but the long end has gone up a little bit. So what they're doing now is they're pricing in the risk. See, before they weren't pricing in the risk because the Fed was there to support the market, right?
Sure.
And then when they did the 0.5 point rate cut on Monday, the market's like, okay, but it didn't have any effect because the stocks went down.
Right. It had the opposite effect of what people expect.
Yeah. So now they're thinking, okay, now the Fed doesn't matter anymore. And so now they're starting to price back in the risk. And if they price in the risk, interest rates are going to go up, I think.
Oh, let's take a look at, they announced $175 billion limit now. This morning or last night they took 100 on the regular.
Yeah, I think they're accepting just about everything that they can.
I like how they're being tricky here because look, we got 103 up here and we got 87 down here. So that's a total of 190 billion.
Yeah. And 148 accepted.
Oh, excuse me. Yeah, I missed that one. 87, only 45. Okay. There you go.
Stephen asked, do you talk about trading those in your Master Wealth class? Yes, I do. I talk extensively about cryptocurrencies, not just trading them, but really what they're all about and why they're important systemically. But also, Stephen, we have monthly meetings. Well, now we're doing them like every couple of weeks, which is no extra charge for those in the master class, about specifically about the markets. For cryptocurrency, stock markets, general strategies and stuff like that, how you can survive and kind of thrive. Actually, last week I titled the Wealth Masterclass update, Survive and Thrive. But yeah, I have a 2-hour discussion. I cut it down a little bit. It's a little over 2-hour discussion of cryptocurrencies. If you'd like to get involved, I can give you a coupon code now so you can take 200 and I'll take 247 off the price for you. Let me give that to you now.
If you want to put it in the chat, I'll just take it out of the after.
Yeah, you get the no, it's a flat rate, and then and then we have the monthly meetings, which is no extra charge.
Yeah, so there's no monthly fees for it, Stephen, is what he's referring to.
Yeah, there's no monthly fees. It's a one-time fee, and you get the whole program and the monthly meetings. The monthly meetings are free.
Diamonds are trying to creep back above, just hit above the 7% loss, so they've recovered from the circuit breaker limit level. But with all of these internals as bearish as possible, I wouldn't trust any rally either.
No. Yeah, I don't know if we've hit that. I posted, did you grab that chart from the Slack channel too? Where the S&P 500 support was. There's the link to sign up, Stephen, and the code to take 247 off is B247. Just enter that on the sign up page. So yeah, so it looks like, you know, we broke down through that 2728 level on the S&P 500. We are down to where now? I'm not sure if we did that.
2564 on the SPX, so we're right around here.
Okay, the low is 2508. So yeah, right around there.
Yep.
I think we got a little more to go. Maybe we'll hit that 2345. So what's that difference? Another 150 points.
Yeah, give or take about 100 or so.
Yeah. Then at that point, I wouldn't be surprised if we get a bounce.
About 200 where we are now. But how ridiculous is it that just the scale of things, right? Before it was, oh, move, you know, $3 and it was a half a big deal. Now it's like, oh, $200 we need to move on the SPX.
Yeah. Yeah.
And it's like, it's impossible. It's like, yeah, I could do that now because we're seeing 2,000 point swings in the Dow.
Exactly.
It's a little surreal, to be honest.
It is, because, I mean, look at the volatility. Look at the size of the bars going up into that high. They were pretty small, except right at the top. They got a little bit wild.
Yeah, they're one in there.
A little bit wild. Yeah. You're welcome, Stephen. I look forward to having you in those meetings. The next one is going to be the 25th, but that'll give you time to review all the materials in the Wealth Master class, and then we stay online. Dan's there every Wealth Master class meeting, and we answer questions for as long as it takes. And I think it's really important going forward. We need to share ideas. This is the time to share ideas with everybody.
Definitely.
We are in uncharted territories here. Although I did say that in 1987, I was at that. I was there for that crash. That only lasted a couple of days. You know, you're talking like there was a Thursday, Friday before the Monday crash that it was down, but it was not. I don't think you're going to be able to get that on there.
Look at this 5X. Sorry.
Oh, yeah. I mean, what are we down to? Like, yeah, I mean, we're talking. Wow, is that below the 2008? Where's the 2008? Can you get that on there?
I'll pull up a monthly.
Okay.
Oh.
Yeah, are we below that now? That's a buying opportunity for stocks. No, we're still not down there. But we're definitely below 2018, and 18 was a big one too.
Yeah, we broke that one from 2011 as well.
Yeah. Yeah, 2011 was a scary one because we had just come off of the lows in 2009. Everybody thought we were going to do a retest of the lows, and it didn't happen. We got a pretty good sell-off, but it didn't. We didn't get that. We didn't get that double bottom or the retest.
Yeah, January, February, March, and we're only not even halfway into March yet.
Yeah.
Think about that perspective. If this is a full month, we could beat it before March is over.
Yeah, we could. Especially if we drop another 125, 135 points on the S&P.
Whew.
So, I mean, the VIX then has got to, or the SPY VIX has got to be down around like 4.
Oh, yeah, it has to be. We'll do a live update here. Let me pull up my spreadsheet.
Yeah.
SPY VIX.
Yeah, it's at 4
Is it? Okay.
right now. Yeah, intraday. Yeah. That typically spells a very, very good buying opportunity, but yeah,
Yeah. There's
we
no
can look.
typical anymore, right?
Yeah, we can look at that afterwards and say, yeah, that was a good buying opportunity. At least temporarily, if we're following that 1929, 1932 playbook,
Right.
we will get a relief rally here, but it won't last long.
What's the VIX up to now? Did it break 60? Oh yeah, 64.29. Wow, look at that. Yep. So what he's talking about there, guys, I plugged in the SPY VIX. We've broken that, so we're down to 4 almost on the nose.
Yeah. Yeah, it typically spells a pretty good buying opportunity. So that price ratio, I mean, it's like you're basically saying that the difference between the SPY and the VIX is only 4 times. Man, if it gets down to 3 times or 2 times, that's going to be insane.
All-time lows from the spreadsheet.
Yeah.
It's only a little over a year, but it's still quite a bit.
Yeah.
It goes back farther. Oh, yeah, 18, 16, way back. Okay. All right.
Well, you guys be safe trading. Yeah, the sidelines is probably the best place to be right now.
Yeah, it's just stuff that moves slower. And anything you're trading, obviously this always holds true, but especially now more than ever, don't trade anything you're not willing to lose.
Yeah.
Capital preservation, you go back to the basics, right? Capital preservation, chance for high gains, remove losses as much as possible, stick to your principles. Don't try and chase things. That's when you get in trouble.
Absolutely.
Let's see how. What are other indicators looking? BOP curve is still going up. Starting to maybe plateau.
I'm in this chat with a couple of guys who are doing an XRP, and they said, "Can someone explain? A few weeks ago, the price was around 30 cents, and Fiat Leak was barely. The volume was about 500,000. Now we're in the millions, and we're at 16 cents. Well, that's easy. We're sellers.
Right.
People are panicking, right? Oh, what's crazy is that, and it's probably also because all of these young guys who are out there trading crypto with margin.
Ooh. Yeah, the forced sells. That's probably what it is. Yeah.
That is dangerous, right? Now, hold on.
The bat phone's calling. Yeah, so we're dropping there still. VIX is increasing still. Andre says, what about the option strategy that works well in volatile markets? Yeah, this would be the time. We're above 40. We're above 50 and 60 right now. As long as you're, they can definitely review those high volatility strategies. And I put that in the post that's on the member site that says Blast from the Past that Dave actually wrote over 10 years ago. So now that we're back in the high volatility above 40, those hold true. So review that. And those are your high volatility option strategies. I'll pull it up quick here so we can just see that. Blast from the Past is the one that I labeled the post. And then there we have so theta scalping, the victory spreads, which is in, I believe it was in the trading as a business. And if there's a specific one, I think Dave was going to have a recording from the exact victory spread, so we'll check on that. Rather, yeah, those are definitely the ones for high volatility, not iron condors, not calendars. Because when they suck that IV away, if it drops away, then that's where you lose it. That's exactly what he was talking about earlier. So yeah, go review that post, Andre.
Sorry about that. It's my sister.
Oh, hey, no problem. I was just quickly chatting about your blast from the past post and high volatility. It's in the member site.
Yeah.
It's 1, 2, 3, 4 posts down. It's the fourth most recent post.
What was the title of that?
Blast from the past.
Oh yeah, blast from the past.
Did you get a chance to find your zip file for the victory spreads by chance?
For the what?
The victory spread. Do you recall we were talking about that?
Yeah.
Well, I just got filled again.
No, I did not. Like I mentioned, I have 3 G drives. I went through the one where I had downloaded everything from Amazon AWS, but I didn't see it in there, so it must be on an older one. I haven't pulled those out yet.
Okay.
But I'll keep looking for it.
Gotcha. No problem. I was going to say we must be turning around because I had another order sitting out there to get filled, and I just got filled on one of my options.
Oh, nice.
So prices are going up again.
Good. Well, yeah, I mean, would we have even thought a month ago that we'd be down days like 2,000 points? Probably not.
2000's crazy.
Yeah.
You know, remember we were talking, I don't know when it was, but when we were looking at, everything's like a blur right now just because of what's happening, right?
Yeah.
But I remember looking back at the long-term chart in the Dow, and it's like we were talking about 20 and 22,000, and we're almost there already.
Yeah.
I didn't think it would go that fast.
Yeah, nobody did. There's no way that we could have anticipated that it would go down this fast. And even then, I thought we'd have a lot more heads up. One of the interesting things I saw the other day was, remember we talked about the number of CEOs leaving their job at the end of 2018 or 2019? Remember that?
Oh yeah.
And then the stock buybacks were like, they showed a graph of stock buybacks, and they went down like at the end in January of this year. So right in the middle of January, all the stock buybacks started to decline significantly, and all the CEOs left last year. It's like, what? All the corporate CEOs and all that stuff is and they're just like abandoning ship.
Right. They're taking it and running.
Yeah.
Look at this weekly chart on the Dow. Look at these trend lines I got in here. We might get to 20,000 or below.
I like that cross. Those crosses are important. I've done that before on other charts where they cross like that. And that, I bet that marks the top.
Yeah, that was from old resistance where I formed that one.
Yeah, look at that cross. That cross where they cross right there is where the top is, I bet. Right there. Yep, exactly. Look at that. Unbelievable. We have perfect 2020 hindsight.
But it's back to reality, because this was not reality.
Yeah.
And they were trying to correct it. Now we're getting the true correction.
Yeah.
And then, like you say, who knows what happens if they turn it around and go up to 50.
Yeah.
But I love.
Yeah, so that kind of confirms that previous low too is on the S&P 500. So we'd get a little bit of a dip under 2,000, S&P 23, whatever.
Yep. So just like the SPX, we broke this one on the Dow. That was at 21.7 today. We're right at it right now, actually.
Yeah.
$20 off it. So who's below that? Not much. That's why I like those instead of just looking for lateral support. And geez, we're already at 45 minutes. We're flying today. Any last minute questions, gentlemen, before we break for this week? Do you have a personal rule about trading with the true trend with regards to volatility? Are you referring to the true trend setups in the internals? Or just the trend itself? When you say true trend in the internals? I would say the only personal rules that I have is I don't trade futures contracts, scalping when there was a circuit breaker hit, just like Dave was talking about early. He's not trading this. I probably will not either, outside of closing my put option positions that I put on a few days ago. Since we had this drop, they've hit. So I was willing to lose, the 15, 20 cents, whatever it was, but now they've paid off. So that's the only trading I'm doing in these types of situations. I personally don't trade futures in circuit breaker days. Yes, I've absolutely scalped them in non-circuit breaker days. I will, when we're below, let's say, so for example, if today was not a circuit breaker day and we were showing lows, this is all bearish. We're below 2000 on the ADD. UD volume is going down.
Nice stair step.
Yep. Systematically, yep. These stay above the 0.8s and 80s. I would be looking to sell rallies. So if I saw a little rally like this, we get above the wrinkled cloud, we start coming down, you can use the signals, put them all together. And also if I've looked at my pre-market volume levels is where I'm going to be doing. I didn't have those today since the market was halted, just like there was no trade setup alert today for the vol arb because futures trading was halted. That's why you don't see any of the gold lines on my futures charts. We're looking at indexes here, but same thing goes for the futures. I don't have my typical above and below lines because of that futures halting. But yeah, that's exactly how I personally do it. The same opposite. If we're above, if we're stair stepping up and we stay above 2000, that's where I look to buy the dips on the true trend days. Make sense?
Yeah. The only thing I would be very cautious though, like if the move, I'd love to see the ADD below 2000. I love to see the stair step on the eval deval, but if it's up or down more than 1%, you have to be a little more cautious. We will be able to catch some of those, I think, that are below 1% going forward. We're going to have some days like that.
You mean the contracts itself or the indexes itself?
Yeah. So if we're only down if we're down less than 1% and we get into a true trend day, those are probably the best setups.
Yeah, I would agree.
Those are cherry pick setups.
And one thing that is, so I don't know if this would be a personal rule, but just something to keep in mind, exactly what Dave's talking about there is when we open and we're already, like today we opened at almost 7% down, right? That's why we hit the circuit breaker. But if we open 2, 3, 4% up or down, that move has already happened. That's going to affect how things work. That's why you won't be able to, because we could get a retracement and we're still up 2% on the day if we start at 4% up. So there isn't as many easy by the dip opportunities there. That's why he's referring to if we're 0.3 up, 0.4 up, and those open up perfect, that is the ultimate opportunity.
Wow. There's only 48 stocks up on the New York Stock Exchange.
Wow.
And only $22 million to the upside.
I'd be curious if there's an easy way to get that list of 48. I suppose you could do a scan and look for anybody that's positive.
Let's see. They do have gainers. All of the gainers are in, it looks like, pharmaceuticals. Like these really obscure ones. Predictive Oncology, Inc.
Yeah, don't do drugs. Don't trade pharmaceuticals.
Alpha Pro Tech is probably a...
They're probably people that are talking about finding a cure for the virus.
Yeah.
Because I think I read somewhere that like 45 things are being tested now because everyone's going gangbusters, so that would make sense.
Oh, yeah. Everybody's trying to push something out, right?
Yeah.
Man. Yeah, it's kind of crazy. In Tiziana Life Sciences.
If you can't say it, don't trade it.
Yeah.
Don't do drugs. Don't do drugs.
The 21-27 day sum is down minus 5,713.
Wow.
The MT volatility is at 185%.
Jeez. And I noticed, now that we're Friday and we don't have a good track record for Fridays, is this going to be another 3 days in a row? I'm like, holy cow, what's going to happen tomorrow?
Well, now last Friday though, didn't we get a rebound on Friday? A couple of Fridays ago, we were down 1,500 points. Then we rallied. Remember, we rallied really strong, and we were only down like 150, 200 points.
Which date was that? I'm pulling it up.
Let's see. That was the 28th. No, yeah, I think it was the 28th.
Friday we were down 257. Previous Friday we were down 357.
And last Friday we were down 250. Yeah, 36 and 228.
Yep, we're both down days.
They were down days, but we were down a lot more, and they rallied back.
Oh, sure, yeah. We were probably, like you say, we were down 800, and we came back to negative 400, which is now a good thing in these.
Yeah, exactly.
We were only down 400.
Exactly. Yeah, that's kind of a rally. But we were down, both on the 28th and on the 6th, we were down a lot. We're down a lot more. I know on the 28th, we're down over 1,000. We rallied back about 800 points to end up down 357. The futures and it actually went positive.
Look at that, we're at negative 16 right now.
Yeah.
Yeah, I'm not even looking at the TSA because.
Oh, it's just getting crushed.
This is nuts.
I'm actually, that as in the past, the NASDAQ has always been the one that's been the weakest, right? Technology. In this case, because it is a worldwide event, and the Dow is typically a worldwide, there's a lot of multinational corporations in there. They're getting hit harder than the NASDAQ, which is
2% right now.
I guess makes sense now. Yeah.
2% move on a 4-hour chart. That's ridiculous.
That is insane. I bet when we get the rally back, the NASDAQ's just going to blow the YM out of the water because it's been the stronger, has declined less.
Wow.
So, yeah, wild. Unprecedented times. Although
right.
1987, though, like I said, 1987 only lasted a couple of days. This is different. This is much different than 1987. This is more like 1929, 1932.
Yeah, I've heard the D word out of other people other than close people too. So we'll see if that starts to trickle into people's conversations. They're not even saying recession yet. We've already heard a few people talking about a depression.
Yeah, they skipped right over recession.
Figure that out. Yep. My toss keeps giving me unexpected errors. Steven says, must be occurred to the system struggling. Yeah. You might want to log in and log out every once in a while because even just taking out the garbage might not be enough in these situations.
Yeah, that's a whole other situation. It doesn't matter what broker you're using. There could be delays.
Yep. I had that on when I closed one of mine. I clicked send order. I never saw the confirmation, but it closed. So I did that exact same thing. I logged out and logged on, and yep, the order filled. It just didn't tell me it did.
Yeah.
So I got filled where I wanted to. There's just the confirmation didn't come back. So yeah, Be careful on anything here.
Oh, look, we got a little green tick on the UVOL, DVOL.
Oh, isn't that pretty?
A little green. A green rear.
That's just the first one though. That's the one that tries to trick you.
Yeah, that's right. Wait till the 5 minutes is over.
Yep, that's only the first minute.
Bull trap, yes. A very little one. But it might get get those people who like to buy the dips get excited. I think we're going to have a rough probably ending for today. Just my opinion. We'll probably go down and close, pretty good down 15 to 1,800 points. And then tomorrow we're going to have another little sell off, hit those, maybe hit that 20,000 on the Dow, hit that 23. What was it?
Oh, on the SPY, yeah, or on the
2345 on the S&P 500, and then bounce. And it's a Friday.
Yep.
So
they might need something to cheer people up for the weekend. We'll see.
Yeah, exactly.
We'll just trade it either way if we can. All right, Dave. Well, we appreciate your time as always, and we'll look forward to catching you tomorrow morning. So is Brad back on the regular, or is he on his alternative channel?
No, he's back. He came
Nice.
back Wednesday morning, so he's good to go on a regular channel.
Very nice.
Yeah, thanks for tuning in.
Yeah, we'll catch you in there, and don't give away the secrets, guys, that you saw today. No, Dave had a question out there on Twitter. Don't tell him what it is. You guys got first dibs.
No, I'm not going to tell anybody what it is.
Maybe I'll wait to post the video.
Yeah.
All right, guys. You guys have a good weekend. Trade safe out there. Grab profits where you can.
That's right, Steven. All right, guys. Have a great weekend. We'll see you on Tuesday, and have a good one. And I'm sure we'll be chatting before then, Dan.
Sounds good, Dave.
All right. Take care.
Bye, guys.
Bye, guys.